I am still in a short on NQ.
This is dealing range theory explained with Sloth Father, and take it away.
All right. So, I'm wondering if either one of you can tell me why I am not interested in NQ until I get more information.
We're at very high levels right now, from at least that I could see.
There is a very specific reason, and it deals with ICT.
What side was it reached?
Okay. This is probably one of the most important parts of trading. And Greg knows it. He's learned it through building his algo and learning price action. This is knowing when not to trade until the market gives you more information. So what has price done on the daily chart? We've taken liquidity from the equal highs and what is above those equal highs.
Well, the fair value gap isn't full.
Right. We are only 50 points from filling that fair value gap. Okay. What is the A+ areas for price to reverse?
Right at those areas, at extreme levels, which that price is pretty extreme, that fair value gap, and that's actually an order block, and you've got a dealing range level there.
Exactly.
There's a lot right on top of that.
You have a unicorn model with an order block, a fair value gap, and liquidity sweep.
Prime for reversal.
At a dealing range level. Also, think about the economy. And this is what I was telling Greg yesterday. We are still in a spot in the economy where I don't believe central banks and big hedge funds are not yet comfortable with where the economy is going to go because of the tariff wars that are starting. Okay? It may work out great for the United States. If it does, the market's going to explode. But we're not sure yet. So why would the central banks and hedge funds allow price to explode higher above the all-time highs? I don't think they would. We may swipe the all-time high, but I don't think we're going very far above it before we pull back. There's another reason why I don't think we're going to go above it and why I'm waiting for more information. Can anybody tell me what that is?
Why you want to wait for more information?
Why I'm not looking to go long for breakout, other than what's up at the top.
Yeah, we've got a really bad habit of doing a fake out to the upside, then reversing down, retesting, and plummeting.
What I see is there's a lot of sell side on the table there.
There you go. If this is a good place to reverse because of the order block, the fair value gap, the liquidity sweep, and the quad level, where could we be going?
Right to that 2.5 level below that fair value gap. Definitely to the 50% level, but I think all the way down.
Yeah, it would take 2.5. Or
think about what price's objective is. Price just completed its objective. Sweeping highs into an inefficiency to rebalance it.
Yep.
So where would price be going if it reverses from here?
There's a juicy fair value gap on that push up to the left there. Between the 0.75 and the 0.5.
Here?
Yep.
Okay. 2 birds with 1 stone. That's 1 bird, a fair value gap. Where's your liquidity?
Right below that.
At 0.5.
That's the
Equal
perfect
lows,
area.
sitting above a fair value gap.
At equilibrium.
Yep. Now, do you think that retail traders are going to expect us to drop all the way back down to 20,500 from 22.2, or are they expecting to go higher and looking for a breakout?
Everybody always wants to keep on making
to
money.
go higher.
Yep.
Yeah. So again, price may swipe the high to get all of those breakout traders in long, but I don't think we're going very far before we head back and clean up this daily efficiency down here below liquidity. Right? Because if we do take this high, which we don't need to because we've already taken these, right? Where does price typically reverse to? Equilibrium, which is where all of our liquidity is sitting. Now, this is a daily chart, gentlemen.
Yeah.
How long do you think it's going to take us to get there?
It could take weeks to get there. It could take days to get there.
Yeah.
Exactly.
But it tells you a bias once you see the move start. It gives you a bias to start looking for so many 100-point trades. There's so many 100-point trades in there on the way down. Jeez.
Right. Now, if we reverse from here and we go sell side, okay, with this dealing range, let's see, and we're going for this liquidity. Let me take the bigger dealing range off for now. Okay, and this is what we're dealing with. What was that? What is that? 675. Is that another dealing range I drew? Take that off. Okay, take that off. All right, so this was our sweep of lows and up to the highs. So this is our dealing range currently. Oh. Okay. All right. Can you see a reason for price to stop at the 50?
I've got a question real quickly, though. Why wouldn't the move that gradually pushed down and then up, down, up, down, up, that be considered the dealing range? Because it did sweep the lows to the left just barely.
It did not. Well, it took these two, but it didn't take this.
Price came down to that level. Are you not counting the wicks, just the bodies only then?
If you look at the bottom of this wick right here, no, I'm counting wicks as a low.
Okay, it didn't take it out. Okay, it almost did, but did not. Gotcha. Okay.
Right.
Yep, that makes sense.
Exactly.
That makes sense. Okay.
Okay.
Now, if it did, would that be considered, or would you still want that whole move to be counted?
I would say where we're at now, I would still want the whole move to be counted.
Gotcha.
I would still leave this dealing range.
Because that does look like one move. Even though it pulled back aggressively, that's still where it started from.
Right.
Gotcha.
I mean, you've literally got sell side to buy side right here.
Yeah.
Okay. I mean, but it's all it is a weekly range.
Yeah. Yeah. Yeah, that makes sense.
Literally a market maker model inside of a range.
Yeah. And this is a daily chart too, granted, so this is a much bigger chart. The hourly is going to be even more condensed.
Right. But and I'm gonna go back and may even do it here, if you want me to, after we mark up a couple of charts. What I want to look at is 15-minute market maker models and 15-minute dealing ranges, because some of the traders in here are trading on Apex, even you. And if you're trading on Apex, you have an intraday drawdown. You can't sit in a trade for 2 hours.
No, that's why I was confused about the daily dealing range versus not doing the hourly dealing range. That's what I was thinking of.
Right. Well, like I said, I always look at the daily because I want the higher time. I want to see where we're going on the higher time frames.
Gotcha.
I don't use them in my trading. I just threw this on to prove
it makes good sense.
Discount.
Yeah, it makes good sense. There's a draw to the 50% level after we take out the 0 line, and then all the way down to the 75. Honestly.
Right. I mean, hell, we got equal lows here above a fair value gap. If we were to break through this, that's where we would be headed.
Yeah.
Because there's nothing else that meets that criteria. And that would be getting back into extreme discount of the larger dealing range. So when I look for a dealing range, I know it's defined by taking the highs and the lows and then going in one direction.
Yeah.
Okay. I get that. But when I'm looking at a dealing range, why isn't this the dealing range?
Yeah. Well, that one that you have looks really good because there is consolidation right before the one that you currently have marked, and that's a good move.
Right, it is. But, let's say we're on a 15-minute market maker model. Why wouldn't that be the entire...
Oh, it would be.
Well, why not? You broke lows and highs here.
Yep.
Okay. A lot of this has to do with the time frame you're on. Because obviously, I mean, we've got equal lows at 17,800.
Yeah.
What kind of panic would the market be in if we went back down to 17,800?
Oh, yeah. That's months of retracement. Months of retracement. Last year we were looking at these numbers, as a matter of fact, when we was doing backtesting last night.
Right. So, I mean, but it's not impossible, right?
Yeah. But not probable in the next week, though, like, it's not going to happen next week.
On the daily chart, we just took these highs.
Yeah.
With this here, and we've come back in and made equal lows. If we don't break this high and we make a lower daily swing high here, what's to say we don't fall back down into this area? It would be very reasonable to me. We could sweep this, bounce back up to premium pricing, and head back down for more discount at lower lows. Especially since this is a range. If we get manipulation out of the range and then fall and get down here, if we don't get back up into range quickly, that's going to be a rollover in the market. To take what? Trendline liquidity.
Upsetting the retail traders. The algo loves to upset retail traders.
Absolutely. I mean, it did already.
Yeah, that did. Yeah.
But you're also looking at
that as a target.
Getting traders back in if we break back above.
Yep.
And when you're looking at a daily time frame, you got to remember there are swing traders out there that will hold positions for 3, 6, 9 months. And these are the charts they're looking on. So those higher time frame traders, retail traders, can get upset as well.
So then for like an Apex account, then what would we look at now that we kind of see the daily range, would we then go to the hourly or jump right to a 15-minute?
That is something you're going to have to work out on your own.
Actually, I like that trend line there. That's actually a really smart thing right there because a lot of people use that, But yeah, I mean, I get what you're saying, though. I mean, I think it's important to look at what the daily's doing. There's no reason to not do that. It's not hard. Doesn't take long.
Right. And I mean, we could say that this is our range and we manipulated it to the downside.
Yeah.
And now we're on our way up. But we could also get double manipulation to just come right back down and break it all.
Well, and right where you started that move from, there's some significant consolidation just before that too on the daily chart too.
Yeah.
From where you had it at.
Yeah.
That right there. That's exactly it.
But time is fractal, right?
Yeah.
So if you're trading Apex, you can't hold trades for a couple of hours because you can't risk the pullbacks,
No.
especially if you're adding to your winners.
Yeah. Yeah. If you're up $3,000
trade, you know, if you're looking at $1,000 trade and
Yeah.
you're trying to catch that $1,000, if it hits $750 and pulls back to break even,
you're still showing
$750 drawdown.
Yep.
Okay, so that's why I'm looking at, and we can even, I mean, we could draw it out. We swiped lows here, and then we broke the highs. So that, I would say, is our dealing range.
Yeah, this move is so extended, it's hard to see the dealing range.
The dealing range is going to be pretty much subjective. I mean, we swiped lows here.
Yeah, that's what I was actually looking at right there. I was looking at that.
Okay. So if you're looking and you want to do it on the technical side and use the very last, I mean, you could, shit. See, the thing is, manipulation can last for a while.
Yeah.
Manipulation doesn't have to be one or two candles and then a reversal. So here's a range. We broke the highs, we broke the lows. Now we've broken lows and we've broken highs. You know, but can you really put a range on that and figure out what the fuck's going on? I don't think so.
No.
I mean, not to me. So the first thing that has to happen is we have to have another reversal. Because if not, we still don't have the high of our dealing range. Right? And if we're looking at price, if this was manipulation out of this range to go back to the high side, we're at 3 deviations right now. 4 puts us above all-time highs. Now, this is another thing I didn't show last night. Your charts can get very cluttered if you want really good information. Because I took the deviations off once I put my quads up, right?
Yeah.
But look at price in between deviations.
Very, very respective. Consolidating, pull back, and then breakout. Pull back, and then breakout. Breakout, and now pull back.
You think you could trade just off deviation lines?
Yeah, absolutely. And there's got to be quite a bit of money between, these deviations.
Deviations standard, or did you have to put the numbers in for those?
55 points between deviation lines.
Yeah, you can make a little bit of money off of that.
No, the deviations, if you watched
on my last video that I just did, we go over all the settings. He shows them.
Yeah.
Nice. Before I joined then?
Yeah. It's just a fib tool, starting at 0 and using 0.5 decimals all the way.
Yeah, except the beginning of that last video you did last night?
Yeah.
Yeah.
Okay.
Probably the first 15 minutes of it we went over it.
Mine stop at 7 right now, but you might as well just fill up all the boxes on the fib tool.
That's what I planned on doing is that.
Yeah, I'm going to finish filling mine out also. So once you draw your quads, Now, obviously, your quad lines are going to be covered up by a couple of deviation lines.
Yeah.
So you need to make like your quad lines thicker
and different colors.
And different colors so that they overlap. You can see them. But you can leave your deviations up.
Yeah, I would.
While you're on your way up to your target, so that you can see when deviation lines are getting respected and know that you might be able to grab a 50-point move to the downside.
And this is pretty much how we're able to do a quad, because we can use deviations as a potential where price is, may go. It may go to the fourth deviation before it goes down, or it could flush from there.
It could, yeah. But where we're at is, that's why I want to see before I do anything else, because price just completed, the algorithm just completed its objective.
Yeah.
It just took liquidity and rebalanced a fair value gap. And also, just for another point of interest, premium discount.
It seems like the three that you need are your quads, the deviation filled all the way out, and then your premium discount.
That's it.
Which is just the 0.5. The second line down, 0.5, that's it. That's all you need.
Yeah, that's it.
That tool could make us all millionaires, potentially. Those three things.
Will.
Those three things.
So, let's just say we do reverse from here now that price has completed its objective. Okay. And where would we be looking to go?
I would say the 2 deviation and then the 1.5.
Well, let's take that off because that's the current range. Okay. We have a swing point here, just above price or above the fair value gap. And what do you think would make this a pretty strong fair value gap? If we had our deviations up.
Yeah.
Let's just say price has to come lower to go higher to break the all-time high. Okay. Remember that this was equilibrium of deviation, right?
Yeah. Right in the middle of a fair value gap. Just after pretty good consolidation, too. So there's a lot there.
Where's the midline of that fair value gap?
Right on it.
Don't tell me there's not an algorithm running this fucking market. The more you backtest this stuff and the more you see it, the more you just can't argue with it.
Yeah. And see, you could take a trade going into the fair value gap. You could take a trade if it launches off the fair value gap, and you could take a trade if it fails it, inverts it, and then goes down.
Exactly.
There's so many different ways to make your 100 points on the way, either way.
If it inverts it and comes back up
and retest,
and the midline holds, okay,
it's going all the way down to that bottom swing point.
90 points.
90-point move.
There's your $900 right there on 5 micros. That, with trend line liquidity and a double bottom, might take 15 minutes or shorter to get there. Because basically what price would do is it would come down, invert the gap, make another relative equal low, bounce back up to the midline, and then you've got a shit ton. You got trend line liquidity up to here,
yeah,
and then triple bottoms. That is going to be an explosive move to the downside. You are not going to be in that trade very long, and you are not going to have to worry about much of a pullback.
Yeah, price goes down much quicker than it goes back up. On a historical basis, it goes down much quicker.
You will come down to this fair value gap right here, bounce a little bit, and then hit that and go somewhere over here. We have a propulsion block over here. excuse me, which is just two fair value gaps stacked on top of each other, coming out of consolidation. So, I mean, but I'm not interested in NQ until.
Can we go and do like a couple months ago and see if we can't just pull out a dealing range to see what happened?
All right, let me clear this. Remove 3 drawings. There we go. A replay. February. We kind of know what happened in December.
October's good.
October 14th.
Sounds like a good day.
All right. And we'll go back to mid-May. You bastard. Okay.
Yep, that's exactly what I was looking at. Took
All right.
lows, took highs.
So that's our quad levels right there. Knowing that we have relative equal lows down here, we made a lower swing high, and we've broken structure. So this looks pretty good to me. I think we are in the sell side of the range of the model. Okay, could be wrong, especially if this is our actual dealing range. Then we're just going to pull back to go higher. Okay, just swipe that high, which was also these highs and this high, and we couldn't break this high. So I would assume and expect that we're going to go lower. Okay. So this is Monday. Let's go ahead and delineate our trading hours, or mark up our trading hours. 7 a.m. on Monday.
I finally calmed back down a little bit. Dude, I could have sworn I was going to hit that truck today. I mean, I was sliding 3,000 feet and not even trying to stop.
Yeah.
It was.
I mean, it's. I just.
The worst I've. The roads were clear and the storm was passing. As soon as they get on the road, storm comes back again, and the plows can keep up with it.
Yeah.
Okay, so we've got our dealing range now. Because that didn't take out the previous high from a little while ago, would this still be a valid dealing range that we're in now, or would it be the one that's just behind us?
Well, this took the highs and lows of
this consolidation. So that's all that we care about is consolidation, right, and then manipulation to the downside. There's our dealing range.
And then take the highs. Yeah. So now we have a dealing range. Okay. All right, so So, what do we have in this dealing range that we need to pay attention to?
Pretty big fair value gap right there.
Great big fair value gap, whose midline lines up with the 50% mark. All right. What else do we have?
We have a small fair value gap right above us.
From our current high, we have an order block. From our current low, we have an order block. So we have order blocks sandwiching the fair value gap because it's such a big fair value gap. You think this is going to be easy to trade?
Just pick one that it bounces from. It's either going to come up and then reverse, or it's going to come down and go up.
All right. So let's make sure we've got our 1 minute up. The dogs will quit hitting my elbow. I might actually be able to move my mouse. All right. So let's take this one step at a time, right? We have closed below the midline. Okay. And I definitely look at wicks. Okay. I measure out my wicks just like I would measure out any other thing on the chart. Why? Because wicks can basically be considered fair value gaps.
Just on a smaller time frame.
Right. Plug my computer in. All right. So we've closed below the 50% of this wick. Okay. And 50% of the fair value gap. So once I already know that, I can take that off. Okay. The other one that I'm worried about is the one at the low. Because if nothing else, when we get down there, what does price always do right before it breaks a low? It bounces.
Yeah, sometimes it'll come all the way down. Yeah, if it's not going to break the liquidity, it'll pull back just before it.
Yeah. So is it possible we come to the 50% of that wick, bounce back up to the midline of an order block that we've gone through, and then fall over? It's usually how it will work, especially if there's a PD array there, which there usually is going to be a PD array right above a big wick like this, because it's usually a reversal point, which means there's going to be an order block there, or a fair value gap, or both. Okay. So if we get down there, I want to see what price does. Where's the 50% of that wick line up with?
Yeah, that midline.
Premium discount line of the quadrant.
Yep. Right at
now, do you think price is going to bounce from there before going and breaking that low?
Mm-hmm.
Yeah, probably. If we get down there. All right. So let's play long. We're still above the midline of the fair value gap. We did close below it, but not with any strength. We've got a big buy wick on that last down candle. They closed it. Let's go to 15. Okay. We just swiped the double top. And we just went into premium of the range.
Into the order block.
Right into the order block. Anybody want to go short here?
Yeah, it looks like a good plan, because it is trying to break through that midline and it just doesn't want to do it.
Or short?
Does it close it or
We
not?
shot down.
Yep. Does
It
that?
hit $200.
Yeah. Does that close that is the question, though. It's closed in the midline, but it still hasn't completely filled it.
Right. And we've got the 25 level here.
Yeah.
Now, where would have been the better trade?
Off of the 50% level before. Yeah.
Wait for it to hit the midline.
Yeah. Because then you could have still withstood the stop, the pullback.
Then your stop is above the quadrant level.
Yeah. So you pretty much want to be patient and wait for that level to be reached. That way, if it does try to poke out of it to hit some stops, because there is some buy side liquidity right there close by that it may try to tag, but you'd still withstand that.
Right. Also, if it doesn't hit the midline and we don't get the short there, where do you think price is going to go? If
Right
it sweeps this low, it's going to hit this order block.
Yeah.
We'll have confirmation that it's going to do that when it inverts this fair value gap. Okay, so if we don't hit midline, we don't get that trade, we invert this fair value gap, we can take the trade as soon as it's inverted. Our stop will be above the midline of this fair value gap. Okay. So here is where I go short.
Oh, it's breaking out of the order block, but is it just wicked to take that liquidity to the left? Nope, it is closing through it.
Stopped out. Anybody else want to try a short?
Those midlines have been very respected, honestly. More than anything else, those midlines have been very, very respected.
What did price just do?
It broke out of the order block in an inefficiency.
No. Well, it's in an inefficiency. It just killed two birds with one stone.
Efficiency and took the buy side.
It manufactured a double top, pulled back, broke through, rebalanced the inefficiency, and so far has rejected. Now, where would you really want to go short at? Right here, which is the aggressive short. We tagged equilibrium of extreme premium pricing. We've completed an objective on the 15-minute, but we've rejected off two sides of this candle.
I'd say if it inverts that fair value gap.
There you go.
That's your answer. It might take that buy side all the way out, all the way to the left still.
All right. So, what has happened right now?
Call it premium. Premium.
Okay. There's also a reversal signal here. It has nothing to do with premium discount.
That order block that's right above there?
Lower swing high. We just made a swing high with this candle below this one. After taking liquidity, rebalancing a fair value gap, and breaking into extreme premium, which we've now just closed below. That's a setup I'll take. And I'm wrong.
You might just really want to go after that liquidity to the left. But you could almost add to it at that point.
Why would you want to go for this liquidity?
Why would Price want to go for the liquidity? Because that's what Price likes to do.
What is Price's objective?
To find liquidity and then rebalance.
At the same time. Is there anything to rebalance above this high?
Just liquidity.
There's no inefficiencies up here.
Not
that we know of.
Yeah. I mean, that wick, if you drew your inefficiency in that wick right there to the very left, that would be about it.
Right.
Yeah.
I mean, you can count that as a gap.
Yeah.
But to rebalance that, you would either have to swipe this high or
tag the midpoint.
Make an equal high. No, you have to close it. If you count that wick as a gap, the only way to close it is to get to the top of it.
Yeah.
Okay. So, I understand that. Plus, you have.
Yeah.
If we break this one,
another lower low from that side.
Probably could go for that one as well. That's a setup I'm still willing to take. We haven't been stopped out yet.
Price could easily just turn around right here and say, okay, nope, because everybody's thinking that that's what's going to happen too.
Okay, I am changing my bias. I'm going long. Anybody know why? Probably won't, because you haven't gotten that far in the videos.
Other than the big ass bullish candle that we just created.
It has to do with that candle. And I'll tell you why it is. Well, actually, all of you should have watched this video that explains this. Okay.
Which video? Because
you have a displacement candle, bullish engulfing candle, and what does the very next candle do?
Comes down to the midpoint.
Midpoint, yeah.
So typically on big candles like this, what do we see created?
Fair value gaps.
Right. The very next candle comes back and immediately rebalances. It came down to the closing price or opening price, sorry, of that candle. What also is that candle?
Order block, isn't it?
Yep. And came down to the tick.
Which now creates a propulsion block.
No, it's an immediate rebalance. It is a propulsion block, yes. Yeah. But if you watch the fair value gap leveling system that he uses, this is his bullish number 6.
I remember him talking about that. Yeah, the different levels of his setups.
Yes. This immediate rebalance of a displacement candle, and by displacement meaning you break above the opening price of a down candle and close above, that is a displacement candle. That is a change in state of delivery.
Yeah.
And price rebalance to the tick of the opening price of that order block. And that is why I switched my bias and I went long. Now, how far are we going to go? Let's see if we make $1,000. We have a fair value gap here. And what time of day is it? Oh, 4:15. Guess what? We're going to have to close the trade. Where are we at? 4:45 to 5 o'clock. So we have to close the trade at the end of this candle. Where are we at on the 1 minute? We can see closer to 5 o'clock. So 4:58. So we closed the trade for $237. 2 minutes before the close. Anybody upset that I didn't close it up here?
No, I never get upset about giving back anything.
Okay. I mean, it's what, $100?
Mm-hmm. I never get upset about what if I closed it early and it kept on going, or
right.
Yeah, nope, I never did. Never do, never will.
As long as you make money.
Mm-hmm.
That's all that matters. This is a signal you need to be on the lookout for.
Oh, motherfucker, dude.
Ali even says it in that fair value gap video. That is one of the strongest algorithmic price signals you will see.
Yeah.
In the market.
When you see a down close candle which creates an order block, a bullish candle with a change of delivery, and then it rebalances that immediately. Yeah.
To the opening price.
That's a good, yeah. And that happened when? At, what time was that? That happened early in the morning, too. Yeah.
Was that 5:15? Wait a minute.
How is that 5:15 if we're at, 5 in the afternoon?
Chart. That's a 15-minute chart. I don't know. 5:30, 5:45, 6 o'clock.
Yeah, it's just 7 in the morning.
Oh, shit. Yeah, we're in the overnight. Let's go back in this trade. fuck it. I've, for some reason, thought we had gotten into the afternoon. I'm going to add to the trade right there. Now, remember, we got into this trade down here. I just added, so our average price is just below this quadrant level, the high we broke. Okay.
That is some consolidation, man.
No, we actually need to be in 10 contracts there. Okay. So now we're back pretty much where we were, but we've doubled our contracts.
Holy shit. Damn.
Now I'm closing my trade. Why?
Because we're starting to round off now.
We just inverted
Yep.
the last fair value gap made, which tells me this is probably a PD array, a higher time frame PD array up here.
Yeah. You can see the weakness in the rollover.
So that was 542 from here on 10 contracts.
That only shows 5, by the way.
Okay, never mind. We hit our $1,000. I thought I hit buy again. It just didn't add.
Yeah, I don't think
add
it
to the
did.
trade.
Yeah, I don't think it did.
Yeah. So we hit our $1,000.
Yeah, that would be $1,000 right there.
Yep. And you're done trading at 9:15 in the morning. That's also why we pulled back. We're right before the open.
Can you blow up the 15-minute charts just so we can see where we're at in the dealing range? Because I'm a little lost on where we're at now.
Oh, we broke the high.
Yeah. So we're breaking highs and
Yeah.
we're just freaking tearing out now. Yeah, okay.
Right. So we have a new dealing range. Consolidation, break
Manipulation.
below, straight up, broke the high. So let's take a look. And I'm going to remove everything off of here. And we just made a new dealing range in the morning. So range is there. This was the manipulation. Top of the range, I would say, is, I'm going to use the top of these candles here. So we had upwards manipulation, downward manipulation to take off higher. So we are now in the buy side of a market maker model. So what I want to do is change this to a 1 hour chart. Was that a nice hour or what?
I take it. And we just took out those highs too, didn't we? Or no? Or are we still? No, we're still below that.
No, we're
Right
up here.
Oh, okay. I didn't see that.
So again, we are in this position. This is when we took out all-time highs.
Yeah. Really hard to figure that out. Really, really hard to figure it out.
It's hard to figure out, but this is good that this has happened, right? Because we can see where it went, how many deviations it went before reversing. And if you find the times in the past where price broke all-time highs and you measure out every one of them, measure out the reversal of every one of them, I'm pretty sure you're going to come up with an average deviation number. Who wants to put in that work?
But we're probably at between 3 and 4, though. Isn't it typical right now, though? It's 3 and 4? Between 3 and 4?
I got to go back into the video. He says it, what to expect deviation-wise to the upside.
Yeah, I thought it was 4.
In the buy models, and what to expect in the deviation to the downside in the sell model. They're different for the buy and sell side.
So then if you were just looking at today, what would we do? So
this, let me move this one to the 15-minute chart because I just want to double check. Okay, that's our manipulation, and that's the top of our range. Perfect, because that's the top of all those 1 hour candle bodies.
Yeah.
Okay, so on the 1 hour chart, we're going to put on our deviations. And we're going to measure from the low to the body's highs. And we are currently just above 3 deviations. So let's just play it out.
No, it's not going to break to 4. It's giving up. Holy crap. And you could almost see that it was giving up on that third level deviation because it went back into it, tried it, couldn't close it. You knew there was a sell there. I was even saying that's a classic failure pattern.
Right.
Could you imagine if you were in that trade short even freaking 3 micros? I mean, holy shit.
That's 256 points.
Good God. In an hour.
To the close that candle.
Yep. All the way back to the bottom. Taking out that.
Not in an hour. Look at the 15-minute chart.
Oh, okay, yeah. That was 30 minutes then.
Yep.
30 minutes. It swept all the way down to that bottom pivot.
On 5 contracts, that's $2,500.
Good God, man. And you see that so many times just by having the deviation levels up and just seeing there's a level. It likes 3 and 4. It likes 3 evidently on this time, and it just tried it, couldn't do it, tried it again, couldn't do it, tried it a third time, couldn't do it. When the hell are you going to sell?
Right.
I mean, good Lord.
On the 1 hour chart, what also did we have? A flat top reversal.
Yep. I seen that too. Yeah.
Propulsion block.
Yeah.
Almost.
That's that's also a massive order block too, which actually is the propulsion block because it finally propulsed away from it.
Yep.
Yeah, that is cool to see, man. Just, it's that eye-opening stuff because, when you start seeing those 3 simple tools and you start marking out on the higher time frame, geez, I wonder what would happen here. And then just by having that marked out, it creates that little bit of confluence of there's something here, Yeah.
I mean, all this is, and the way Ali explains it, is the reason we're ranging here and we keep tapping that 3 deviation is this is the algorithmic signature from the central banks telling all the big money, hey, you need to get short here.
Yeah.
You need to get short here.
And then finally a big order was placed at 9 o'clock too. At 9 o'clock.
Yep. 10 o'clock.
Oh, 10 o'clock.
10 to 11.
Yeah. I mean, holy
10 o'clock
shit,
reversal. Your 10 o'clock reversal.
I mean, good Lord, man. That is incredible. And I bet it still goes down, though. I mean, I bet there's still room to go. Yeah. That may be a manipulation there now. Yeah.
What is price doing?
It's balancing. Rebalancing.
Equal lows.
Yeah. Rebalanced equal lows.
And swipe this low. Do you think we're going to go higher?
Oh, yeah. I think so now.
Was this inefficiency already rebalanced?
Yeah, just barely.
Yeah, probably.
Yeah.
I need to throw a ray on, make sure.
I can't tell. If it wasn't, then maybe not. It could be just, nope, it wasn't. Holy shit, it wasn't. Just by one tick. But then it finally was after that last sweep, though. It did it just then.
Yeah, this rebalanced it.
Yeah.
Now, do you think after we broke all-time highs and a rebalance of this is going to be enough?
I don't know. There's a big ass inefficiency down there. I mean, it's hard to say. It's struggling at that zero line. It's really struggling on that zero line. See, and that tells you right there, because you see, I thought maybe it was looking to the long side, but then it is struggling so hard to get back above that line. It just tells you what it tells you what you want to see practically. Now we finally breaking through it. Now we're getting some love.
All right. Now let me show you. Where did we come down to? We didn't swipe this low. We didn't get into these inefficiencies. Anybody want to go short?
Oh, yeah. Oh, damn, we did close it. But we still got there, though. I don't know. It's hard to say now. But it's hitting it, though. It's hitting it.
Your stop,
yeah, but we didn't close it.
Yeah. Right. Your stop would be above the fair value gap.
$1,100, man, in fucking profit. Fucking, there's your $1,000 right there. Now it's going to push through it. It's attempting. It really wants to. Nope. Fuck off. I would have closed it a long time ago. I ain't gonna lie. Because it'll eventually say, you know what, we're going to close above it and go for a run. It just so aggressively wanted to freaking, holy shit. You seen how it tried to, that was more of a manipulation than anything else, really.
Now we've rebalanced.
Yeah. So that was just, it wasn't even like, hey, we're tearing off in the other direction. That was just basically a manipulation to the upside, and then obviously we're consolidating back below it, reinverting it, and then you see those failure patterns right there.
We had more strength holding it below the midline.
Yeah.
What are we doing down here holding below the midline? Engineering sell side liquidity.
Yeah. For it eventually to get enough. Okay, so it eventually gives you enough engineered liquidity to then make that move all the way down to rebalance lower side liquidity.
They go and grab all the buy stops.
Yep.
And the stop orders up here, and then they resell them to all the sell stops and sell orders.
And we've never even come close to stop loss. Close, but we've never hit, because you're above that inefficiency still the whole time.
Exactly.
Good Lord, dude. That is fucking mind-blowing. Close that damn trade up, please. That is awesome, dude. That is like the patience to know that that's the draw in liquidity, and then see that, okay, we taken out to the left and we are still holding that inefficiency. And I look at it because I see those failure patterns. I'm really good at identifying the failure patterns, but that's cool, man.